Welcome, everyone. My name is Maggie. I am an economic development specialist at the Manhattan Chamber of Commerce. Today, we are really excited. We are joined by Krishna and Jack from the Global Trade Council. Throughout this session, if you have questions, you can feel free to drop them directly in the chat, and we will also reserve some time at the end for you to ask your questions live or ask additional questions if you have them. And yeah, I think we can kick it off and get started. Christian and Jack, take it away. Thanks for joining us today. We really appreciate it.
Thank you, Maggie, for having us today and for giving us this opportunity to host this interesting conversation on India. And a sincere thank you to everyone who's joined in. I know this is a time when the calendars are packed and you're trying to wrap up things before the Christmas break. So we truly appreciate you making time to be here. We'll keep this session very practical and hopefully we aim to leave you with a much clearer picture of India as a market. Let me start by giving you a little bit about the company and the work that we do. But before we start off, I want to apologize. I'm down with a bad flu, so please pardon my throat, and I've been coughing in between. So I'll be sipping in water in between. So kindly excuse me for that. All right, now starting on, I'll give you a bit of context by telling who we are at Global Trade Council and how the journey started. So we started GTC a little over 3 years ago, and the reason we came together was actually very personal. All of us who founded the firm, we had spent years working with international companies and foreign governments, often at the other side of the table. So we are the ones who were trying to understand the India market and working with local advisors, consultants, and partners. And what we kept on was running into a gap, I would say, between the kind of information that was shared to us, the kind of execution that was being done, and the results that we were getting into. Because many local advisors we felt that didn't really understand the India market fully, and especially the constraints that a foreign company is facing when they are entering into India. So, given that gap, we started this company, and now we are a consulting firm. We work with international governments, trade investment promotion organizations, and foreign companies that are looking to expand or enter India and the MENA market. So it's been around 3 years since we started, as I said, and we are present across the globe. So we have got our representatives in Canada, Switzerland, Dubai, of course, in India, and then in China as well. So this is the people who are behind the work. I'm the director of strategy and international partnerships here. And I have more than a decade of experience working with foreign companies, trade investment promotion organizations, and public institutions, helping them expand into India and also the wider South Asia MENA region. So the areas that I handle in GTC are basically market entry strategies, partner developments, and also helping in understanding and finding the right partners for you in India. So previously, I was the India head for an organization called as Basel Area Business and Innovation. So it's a part of the Swiss government. I was looking after the India market, and I've held similar roles with many other international government organizations before starting this company. Jack is a finance and taxation expert, and he has extensive experience in supporting foreign companies, investors, institutions, helping them scale in India. And also, he has a very strong financial knowledge. So he brings across tax advisory, then company incorporation, then FEMA, FCRA regulations, accounting. So he has very hands-on experience with international businesses as well. Now, just quickly moving into the kind of services that a company provides. Let me just classify it. We have classified it into 10 services. So the first one would be market landscape mapping. So here, when we say market landscape, it generally comes as if we are just pulling data off the internet and just giving it across, which is not what we do. We are answering very practical questions. So who actually buys in India? Who influences the decision? Is price the driver? What drives your product or services? So we are trying to tailor your product very specifically to the India market and give you very specific and hands-on questions. And then business and regulatory navigation would basically be to understand India's procedures, FDI rules. Of course, Jack is the one who gets this business registration incorporation. So he brings that angle of financial incorporation into our service. And then we have location assessment, which would basically mean which city are you planning to enter India? Because India is I wouldn't say one market, it's many markets in one country because different cities have different logistics, different ecosystems. So it depends on what is your product or service and which city in India would be the right fit for you, and we help you with that. And we also help you with strategic planning and entry pathways, which is basically to decide how you enter. So, do you export first, or do you partner with a local distributor or supplier? Do you have a franchise? So, which is the way that you want to enter? We can help you with that. And then again, we help with on-ground representation, which would be that if you are not ready to set up in India, um, you would still need someone on the ground. So we'll manage your team, we'll do the hiring, and we will speak to partners. So that's the expertise that we can bring on. The other set of five services, again, would be setting up a team, setting up HR advisory, being your employee on record. And then we have vendor infrastructure coordination again, helping you with the local vendors, with negotiations and with getting the work done. And then we have IP support as well because it comes in a lot. India's IP regime has definitely improved significantly, but I would say the enforcement depends on how early and how properly things are structured. So that's where we bring our expertise here. And then helping you with the entity setup. So when you decide to commit, entity setup is the point where we structure this. Which ownership models to ensure tax efficiency to compliance readiness will help with all of that. And the last one would be we manage the moving parts, that is timelines, partners, compliance, reporting. So clients are able to manage their entire product projects on time. Very quickly, this is the highlight of our activity. So we have had our innovation boards where we bring together market experts from different industries to help us position the clients in the Indian market. And then we also have a lot of speaking engagements where we represent our clients on key Indian events and forums. And we also do networking on behalf of our clients. And again, we have thought leadership, which we have through articles, interviews, which we have. And again, finally, we have webinars like the ones we are doing now. So some testimonials here from our international clients. So now moving on, coming on to the whole session, which is about India. Now, before I move on, of course, I've put this very strategically so that I can have a minute off for my sore throat. Well, but okay, jokes apart, we have a poll question, and we want to know you better, of course, and that's the reason why we have this. So, please tell me about your experience in the India market and whether you have had experiences you are working here or are you first timer. We've got three responses here. Um, so you can type in either A, B, or C. Of course, you can also feel free to type a short response in the chat. You have your chat box ready. I'll give you a minute to respond. So please go ahead and uh, let's get started. I think that would be, we are good to go now. Thank you for that. That's very helpful information for us. Now let's get started. All right. So, moving on, first I would like to talk about the growth story of India, and then that why you should look at the India market. Because in fact, recently I was listening to an interview by someone called as Ramdev Agarwal. He is the co-founder of one of India's largest and most respected investment firms. He told that India was entering what he calls as a multi-trillion dollar era. And that framing really resonated with me because it very clearly explains that why India feels different at this time around. Because India is not just growing, it's compounding. So over the last 2 decades, if you could see that India's GDP has averaged around 6 to 7%. And even today, it's growing faster than every other economy in the world. So if you look at China, it's slowing, and Japan and Germany are barely growing, and many developed markets are managing stagnation. India, by contrast, has definitely made high growth its baseline. And this consistency is what I see has been creating confidence in the Indian market. The other reason for this would be because, again, we see that India is now changing. It's moving beyond being just more than income growth to creating wealth. Because as income rises, savings rise, and as savings rise, investment rises, and that investment flows back into the economy. So it becomes a loop because growth creates wealth and wealth fuels consumption and that pushes growth even further, so and this is what exactly has been happening in the US and other developed economies, and now India is also entering that phase of wealth creation. So that's also one of the most important factors for India's growth. And then we have the scale at which India is operating. So we all know that India is a big country, and we are already a $4 trillion economy. And our projections are that we could reach 15 to sixteen trillion dollar over the next 15, 20 years. So now it's not just the growth rate, it's also at the base at which we are growing. So growing at up 6 to 7% on a much larger base creates enormous incremental demand. So that is what also makes India very commercially interesting. And then we also have the per capita income where consumption start changing meaningfully, because historically, the consumption, India was considered to be a very price sensitive market. I wouldn't refute it completely. It's still a price sensitive market, but now we are also focusing on quality over the quantity. So now we have a lot of discretionary spending, which is being accelerated across sectors. So mobility, housing, healthcare, lifestyle, consumer products. So many categories, I would say, in India are still underpenetrated, which means that growth, there is a lot of scope for growth and for high quality products being introduced into the Indian market. So, of course, also globally, we are set to be the number three ranked country by 2030 and surpassing Japan and Germany. Um, Now, moving on, so this talks about the consumption potential of India. Again, something which is very relevant from the US point of view, if you're looking at India as an export market. Um, because there is an inflection point which generally happens in emerging markets, and it tends to happen when the per capita income crosses roughly 2000 USD. So now India has crossed that threshold. So now the per capita has moved beyond 2000 USD. And history shows that when country reach this level, consumption behavior changes meaningfully. So China and several other emerging economies also saw a similar phase. They saw a very huge increase in their consumption level once their per capita crossed this mark. And now India is also entering the same phase, but the advantage is that we are entering at a much larger population scale. Because here now the middle class is expanding very rapidly, and that's what really stands out in India. Because if you look at the graph here, a very interesting graph, it talks about that how between 2019 and to 2030, over 1 billion Indians are expected to move into the higher income and the middle class categories. So we have the projections are that by 2030, nearly 68% of India's population is projected to be middle class. So this is not just a demographic statistics, that's the spending power of these people who will be into that particular category. And that is where the entire consumption will be concentrated, you know. So again, if you look at the graph, it shows that the aspirers, affluent households, and the emerging middle class. So these are the income groups which are growing at the fastest scale. And these are also the segments that drive discretionary spending. So it's not just what do you call, just the regular staples, but I would say these are like upgrades. So better products, branded goods, technology, healthcare, education, travel, lifestyle. So all of this is being driven by this big category. Um, Also, the consumption, there are other factors to this increased consumption. Of course, we have the demographic strength. But apart from that, we also have urbanization, which is driving this because we have a large young working population, and then we have rapid urbanization. And then we have rising aspirations, which is again driven by technology and access to information. So technology is also playing a very huge role in increasing the demand in India. And so now, what it means for US businesses, coming over to that question. So it means that India's consumption story is not just speculative, you know, it is very structural. And you're looking at a market where the income growth, demographic scale, and aspirations, all of them are moving in the same direction. And that definitely creates a big runaway for demand. So definitely a very high potential market and for US and for even for high quality imports into India. Now talking about a few sectors where we see a lot of growth potential, especially some sectors which would be very relevant for US companies. So here, the first sector we have is consumer and lifestyle products. So I have spoken it about before as well because as income rises, the middle class expands and the spending moves beyond essentials to branded higher quality products. And that's where this comes into the picture. So we have seen a growth rate of around 10% to 12% in India's home and lifestyle imports. And also the premium imported goods have been growing exponentially. Then we have industrial goods and machinery. This is also something that we have seen a lot of growth in India because we have a large capital expenditure cycle. So India is investing into infrastructure, manufacturing, logistics. Um, then you have energy and urban development. So this translates into very strong demand for advanced machinery. Then we have specialized equipments, automotive solutions, and high specification components. Because the domestic supply is still catching up here, and this is a space where U.S. exporters can definitely compete on not just only price but also on performance and on the quality aspect of it. And then we have technology and ICT services, again, a very strong industry in India because India's digital economy is scaling. And we have a lot of enterprise tech, cloud adoption, data infrastructure, AI-enabled services, especially cybersecurity, of course. So in fact, India is definitely, we know that it's a global IT exporter, but it's also a significant importer of advanced technology platforms and solutions, especially from the US. So this is something not everyone knows of, that we also import a lot of technology, a lot of services from the US. So this is also, and again, an opportunity not only for product exports, but also for enterprise relations and also for long-term services of technology. Then the last category I would talk about would be medical devices and diagnostics. That's also growing very fast, especially because India is a very import dependent. So we have around 70 to 75% of our imports in this category. So we are dependent on other nations. And here again, I guess US can fill in the gap because it has an advantage. And so US firms are very strongly positioned and for medical devices and diagnostics, especially given that the domestic manufacturing is still lagging and still we are relying very heavily on the imports. Um, so now, if across all these sectors, the theme is common that India is importing not only just products but also capabilities and high value capabilities. So quickly, I'll just talk about what. So now, what we have spoken is that why India's demand is increasing, which sectors do we see? Now, this slide is about what this means for US exporters and how you can trade with India on the ground. So, a couple of things here. First is, of course, like I have spoken about this consistently in the previous slides, that India is moving up the demand, decisively up the value chain, and we are no longer importing basic or low value goods because now we are importing high value goods. So that means that Indian buyers are prioritizing technology depth, then global standards, reliability, and especially long-term performance. And again, so this is an opportunity for US companies. And then we have the capex-led demand because now India's combined expenditure, that is public and private capital expenditure, is around 150 to 170 billion dollars annually. And that investment focuses on five major areas, which are infrastructure, renewables, manufacturing, logistics, and urban development. And these are not only short-term stimulus projects, they are multi-year build-outs. So this matters because the capex at this scale directly pulls in US industrial engineering and technology solutions. So right from, I would say, advanced equipments and automation to energy technologies and specialized components. So for exporters, this is definitely very interesting because it turns out into a longer sales cycle, then higher ticket contracts. So it's not just a one-off transaction. It's a place where you can see long-term growth for your company. Then, of course, we have the service trade, which again I had just spoken about. Because India, in fact, as I mentioned, that the US runs a service trade surplus with India. That means that India is also importing a lot of US services across cloud, AI, cybersecurity. Then we have enterprise consulting. So this is also very relevant for a tech-enabled and for professional services company. Then we have supply chain realignment, of course. So this has been there on the news, and we have been reading it everywhere. Because the companies want to de-risk and diversify from a single country dependence. And India is strategically also being integrated into this plan, so for their sourcing, manufacturing, and export strategies. Also, we have seen that many US exporters, India is also becoming a part of their diversification strategy, particularly in manufacturing. Then you have electronics, engineering, and for diversification of their supply chains. So even global supply chain realignment has been in favor of India. And then now, what brings us to the most there in the news, which is tariffs. So we all talk about how tariffs is going to affect the India-US relations. But I would say that even after tariffs, US India trade has been growing at roughly 8 to 10% year on year. And trade is expanding not because tariffs are low, but because there is a lot of demand in the Indian market. Of course, I would leave it to my able co-presenter Jack to talk about it in a little bit more detail in the next slide. So over to you, Jack.
Thank you so much, Krishna, for delivering all this presentation and the content so nicely about it. And of course, speaking now regarding tariff, it exists, but demand scale, strategy matters more. And at this point, in almost every India conversation, the topic tariff comes, and it is understandable basically. But tariff feels tangible, it is measurable, and risky. We understand that, but to let me separate the signal from the noise, explain what tariff actually means and don't mean for US exporters. So the first one that you see is tariff exists, but it varies. It is not uniform. It is, it changes, differently from sector to sector. Yes, India applies tariff across product categories. On average, India applies a tariff at a range from 13 to 14%, but that headline number hides a lot of variation basically. So consumers and agricultural products do face higher duties, but many industrial inputs, let's say for example, for component component goods, capital goods, specialized equipment, these are kinds of product, which are tied to infrastructure, manufacturing, and energy, face much lower and effective rates basically. So the first point is this tariff in India are sector specific and not just a blanket, if you can see over here. So second, if you see over here, trade is always resilient. What the data shows, after all. Now, the most important question is not whether tariff exists, it's whether they are stopping any trade at all or no. So, and the data given is very clear for to the answer. Total US India trade, including goods and services combined, both is approx and maybe more than USD 210 billion over here. And it has been growing year on year from 8 to 10%, if you can say. That growth has, continued despite of differences in tariff, periodic trade frictions, and all these things. But with tariff, where a dominant factor, we wouldn't see all these kinds of trade talks or conversation or business forums meeting even happening. But that is what it tells us, that demand and capability gaps are overpowering tariff frictions, and it is way more important that we just concentrating on particular noise or headlines like tariff or anything. It is just that it gives us more competitive edge with each other to do this business more. So third is that you would see service advantage, often overlooked, as we understand. There's another important, which is another important dimension here and often gets missed. So large part of the US India trade, if you would see, is in services sector and not at all or entirely in goods, if I can say that. And categories like IT, digital services, consulting, engineer, I mean education, professional services. All these things are largely outside the classical tariff regime, if you can say. So in fact, US often runs a service trade surplus with India, meaning Indian companies pays US firm more for services than the other way around. As Krishna earlier also mentioned, how the things is really very nicely tied and partnered together with so many companies in US, along with so many companies over here in India as well. So that tells us something very important, that Indian buyers are willing to pay for US expertise, in technology, platform, or system, and stuff like that. So fourth, what we see now is what should what really matters in a high value segments, right? What really matters over here. So for high value goods and services, tariffs are rarely that I would say a deciding factor at all. What matters more, I would say, is product quality, standard, certification, reliability, and after sales service support. We can say even that. So in all these segments, Indian buyers often absorb, duties because the cost of failure is far higher than the cost of the tariff, basically. This is why US companies tend to, perform well in machineries, medical devices, advanced electronics, and enterprise technologies. So what should US exporters actually focus on? It's a very interesting question, and the answer is quite also interesting very much. That so where should the exporter even focus their energy at all? Successful companies basically focus less on tariff, I would say, and more on the real business aspect that would make them even more successful in future. So getting the product positioning right is very important. Choosing the right market is also one of the very key aspects that I would say. Then selecting credible local partners, structuring your price, and distributing certain goods, products sensibly. These all tools will likely be very, I mean, correct way to enter and focus on what you actually mean, on what you actually want to achieve over here. So so this is what it is, and so if I would say in this slide, what we can take away is very simple. Tariff is obviously not that should stop anyone from doing business or entering a market, so to speak. They are just to filter it out, and towards the company that are serious, and make the companies more competitive so that they could understand their product and business more, and then work for it even at higher level things. Yes, Krishna, can we go to slide 16? Yeah. So
Yeah.
now a very important and very interesting slide, if I can say, like many would have a question right now that how should we basically now enter India? I would say there would be three ways, particularly very strong and very important, which first would be export via distributor, local partners. Second would be joint ventures, and third, of course, wholly owned subsidiary, if you at all think that is the way you can enter, but that is very entirely a different game. But of course, starting with export via distributor or local partner, which is again starting point, most US companies would start with exporting through a local distributor or partner, that is for sure. So in this model, the US company stays offshore, most of the time, while the Indian partner manages imports, pays off the duties, local sales, and handles all the relationship with the customers. So this typically is the fastest and the lowest risk way to enter the market. It allows the company to test the demand first of all, understand the customers, learn how the market works without committing to set up a an entity with such a huge investment, so to speak, at a very initial stage. This is a very nice way to enter the Indian market. So the only key risk here is not the regulatory, it's only about how you would select the partners, who would be your distributors, who would be your agents, and stuff like that. So a strong distributor would really accelerate learning and growth. A weak one would obviously, I mean, it will slow down the whole entire process, and whatever dream a business or an investor would have in this particular thing. So second would be joint venture, strategic partnership, if I can say that as well, which is more like diving deep, going deeper. The second pathway, right? So this is more common in regulated, capital intensive, and operationally complex sectors. Why? Because in these cases, local execution capability really, really matters a lot, whether that's dealing with the regulators, managing large project or navigating even the supply chain aspect. So this model would allow company to share risk, basically, combine global capability with local insight and scale faster than exporting just, and that is why the trade-off is that governance, alignment, and exit planning is very important. Third is wholly owned subsidiary, which is a very long-term commitment if anyone is trying to enter the Indian market, which would mean that you're setting up an entity with company's name, registration, bank accounts, some local directors, a few employees, their payroll, managing their expenses, operational, working capital, all these stuff. But this would only come in a stage when, let's say, for an example, you have already entered the market via export or distribution model, and you have tested your crowd, your customers, and maybe you are now so much confident that you just want to cut down your distributor or agents now, and then you want to take whole profit back to yourself and repatriate them as a complete brand of yours, basically. So that said, this model requires a higher upfront investment, compliance effort, management attention, of course, and it's worth emphasizing, by the way, that most companies don't start here. Why? Because they move into this model only once India has proved itself for them as strategic growth market, and they are really, into it, that they can take risk, and now they have attained much of the experience in this market, and then they would like to grow to a next goal of them, theirs, whatever they have in their business or career or whatever. uh, we can go to the next slide. So I mean, the last slide typically, is that the companies start with exporting first or partnership, learn the market, and then dive in the presence of yours over the time, and maybe then India would reward you with, things if you only have the patience and the sequence wise planning. So the key takeaway of that particular previous slide was really very simple, that it is clear it's a stage path that you have to enter into the Indian market, and you don't need to overcommit to yourself upfront during the very beginning of your whatever your goal or dream is about. So starting slow is good, choosing the right options are good. So that's what it was from that one. But then in this slide, what you would notice are, several pointers wherein we have mentioned clarity on the customers and the market, whether you have it or not, how you would assess and enter the market, basically. So this slide is an important one because this is where India often feels overwhelming, and there's a perception that entering India requires solving everything upfront, which is regulation, structure, partners, compliance. But in reality, successful entry into India is about getting a few fundamentals right at early stage. That's it. So clarity on the customer and the market. First of all, you have to understand that particular aspect very, nicely. Everything starts with an understanding who is your real customer, basically. In India, purchasing decision are often, influenced by multiple stakeholders, not just at the end user that the decisions are being made. There are so many other people, involved in this, particularly the procurement team, the technical evaluators, the senior management, and all these things. So India is also not one uniform market. I mean, just as Krishna was mentioning in her earlier slides, that India is huge. I mean, as an area basis, also as a demographic basis, also as a population, also. So we have every kind of market over here present, from middle class to affluent to HNIs, and that is why it is a very interesting market overall. So what, as previously again spoken by Krishna, that what would work for you in Mumbai is not obvious that it would work similarly in Bangalore or in Delhi or Hyderabad, Calcutta, or wherever. So companies that invest early in these kind of understanding, would avoid expensive course of correction later stage. Yeah, that's there. And choosing the right go to market model. I mean, most US companies succeed by choosing the right go to market model at the right stage. That could mean starting with the distributor, maybe working with a strategic partner, or eventually setting up your local entity, which is a very, I mean, overcommitted thing. I mean, we would also, I mean, anyone would definitely not do such investment, but depends. I mean, what is your goal, what sectors you are in, and what kind of model your complete product or services is required at all. So the key point is that decision is I mean, is important. Companies evolve with their model as demand, as confidence, evolves and commitments grow. Trying to start with most complex structure often would slow down your progress. But after that acceleration, I mean, you can of course try, maybe to setting up your own company, entity, business. I mean, legally by the law of land. So, and third, product positioning and pricing that fits in India. So, US market, uh, I would say, who succeed in India don't just sell the same product in the same way that they be doing in any other market. India market is very different, if I can say that. They take time to align specification. You would need time to align your packaging, pricing, price expectation to that of the Indian market realities. I mean, it is that India is a value conscious, but it is not, quality averse. I would say that when the value proposition is clear, I mean, especially in the high impact or mission critical categories, buyers are often willing to absorb those kind of duties, logistical cost, or whatever things are there. So early attention to the regulatory and compliance basics is also so much important over here when we speak, in this entire event of, a process of entering a market over here in India. So you don't need to master every regulation, at one single day or at the very first day of your business and stuff like that. But you do not need early, but you do need early, a clarity on few basics. I mean, product classification, uh, import requirements, what are the tax implication. These are not barriers, if we can say so much, as it's just a process steps, with the right local support. They are predictable, they are manageable, they are routine, if I can say that also. Yeah, routine is the right word for to yeah, where the companies get into trouble is not regulation itself, but mis-sequencing, of the local execution. So we would advise always to test it, if it is, to try with local partnership, local distribution agencies, stuff like that. But as again the fifth point also says about here is on the ground support, to reduce the overall risk and friction. So finally, what really differentiates successful market entry is the on ground support. That is very true. In fact, India is a relationship driven market. Having local representation, even without a formal office, will help you manage, partners, follow ups on issues and stuff like that. So presence and responsiveness matters far more than perfection at the initial stage. At later, step by step, when you will understand the overall, situation, market, style of doing things over here, it will just be smooth for you, that I'm sure. So the takeaway would be very simple again. India entry is not about complexity, basically, if I would say. It's about preparation, it's about sequencing, it's about support, local support, on ground support. And when these two, three things come in place, are in exact right, place, position, the market becomes far more navigable than it appears from outside. So we can go to the slide 18 next, Krishna. So how global trade councils support, market entry and execution. To close, I will spend just a minute on how we support organization navigating this journey. This is not about a one size fits all solution. It's about helping companies from interest to execution in a structured, realistic way. So, market and sector intelligence, as it was in the beginning, very much told again, by Krishna, that we usually start with market and sector intelligence. That means understanding where the demands actually sit, which segment matters, which region would make sense for you, what competitive landscape would actually look like. It also includes an early view of regulatory and policy consideration, not in a technical, but to ensure that there are no surprises, later on. Entry strategy and structuring, once that clarity is in place, we would help choosing the right entry model. That could be exporting through the distributor, working with the strategic partner, or structuring a local presence over time. We would help think, through FDI, tax, operating structure, so that the commercial model works in practice, not just on paper. Third is partner identification and due diligence. For many companies, of course, success in India depends heavily on partner selection. So many times that we have mentioned, and we still keep on. We are keeping it mentioning over here is that we would support the identification and evolution of the distributors, joint venture partners, strategic collaborators. This would include commercial, financial, governance, due diligence, as well as alignment discussion, because in India, who you work with really matters as much as what you sell. Then on ground execution, another, again, a big part of our work is on ground execution. Our team act as a local interface, managing partners, stakeholders, vendors, and regulators, basically. So this allows companies to stay engaged in the market without having to step up, a local team immediately. So, and program management scale up as India becomes a more strategic market. We support scale up. That includes performance tracking, reporting, governance frameworks, and expansion in new regions, customers, and even the product line. So our role is to stay alongside the client as India moves from being an opportunity to become a core market right now. And as earlier we saw that it's a multi-decade opportunity and market currently for the whole world to try and test the water of India. There are so many things basically going on. You would see our prime minister, every time having certain meetings here and there always. But yeah, those are on the lighter notes, of course, but it's very interesting right now, more than it was ever before in the history, if I can say. So in simple terms, our role would be to help organization navigate India with clarity, with confidence and control. And to make the journey more interesting, would be the execution, be as smooth as possibly can be. So I'll stop there. And that was the broad overview of India as a market, how US companies typically enter, and what really matters in getting things started ultimately. Uh, so now we would love to open the floor for the questions. Please feel free to ask anything, whether it's about any specific sectors, entry models, tariff, services, how you think about India, for your business. If your question is very company specific, we are also very happy to, follow up after session and be in touch.
Yes, thank you, Jack. I think for the information that you have just shared. And in fact, I would encourage the audience to please type in your questions in the chat box. I've also included my and Jack's LinkedIn profile. So you could connect with us there itself and we can take forward the conversation. I'm just waiting for a couple of questions from the audience, whoever is there, please. It would be nice to hear from you how you found the presentation, whether it was informative as well. And is there any specific aspect that you wish that we could have covered, or you want us to do that in the next series, of course, that we have to take up with Maggie. But yes, but meanwhile, please type in your questions. I'll wait for a couple of seconds for the questions because we still have some time here. All right. I think one question has come up. So it someone has put in a question asking that India is a very price sensitive market, and then I mean, how does US products need to compete? Do we need to compete on cost? Well, that's definitely something which is there on everyone's mind, and I've also spoken about it before because um, the idea is that India is definitely very price aware, but it's also but it's not only price driven. India is today is really like a barbell market, because at the mass end, yes, pricing matters, but at the fast growing segments, which are actually the mid to premium categories where buyers are taking decisions based on quality, reliability, compliance, long term value. So we are seeing that this clearly across sectors. So we have, as I mentioned, a couple of sectors as well: consumer products, medical devices, technology. So buyers are definitely willing to pay more if the product delivers better performance. So I think for US companies, basically that you are competing on value, and if you're able to show the value to consumers, then definitely you will find a good market in India. So that positioning is definitely something that we need to focus on when you're looking at the India market. I hope that has answered the question. I think we can take up one more question. Of course, so maybe this could be done from your end, Jack. So how can a US company enter the Indian market initially? So the first step, what they should do and how they can look at India.
Uh, Absolutely. I mean, of course, this is very interesting to answer every time. It's very important also to understand initially that what business it is after all. If it is into trade, products, goods, then maybe why not, with the distribution market entry, which is a very best model. You just export the things. You have already partnered with your distributor or agent, and then he takes all the compliance aspect and all the regulatory aspect that has to be done as per the law of land in India. He will take care of everything. You just need to just ship, export your goods to India, and once it is imported over here, let's see how your products or goods is doing in the market, how much is the demand, and if it is good, you are satisfied, scale it up to the next, maybe why not then take up on open a entity or open a branding thing like that. But it really would really help that, I mean, in what particular company, or I mean, sorry, the business you would like to achieve or succeed. Otherwise, what I have personally, as per my experience, noticed whenever we do business, with the US clients and vendors, partners, and stuff like that, the IT sector is also, quite booming. I mean, like, you must be very sure about it that there are more than I mean, there are so many US IT companies that are, the back end support is over here in India. uh, so they are continuously, doing trade in and out with the US businessmen, and even the Indians also. So IT is particularly one which I would say is a very good, nice sector that one could see. But in that case, you will have to form a company over here and have to understand what your real goal would be. But as our slide basically told about that, if you want to test, go with the distribution earlier, distribution partnership, uh, partner with someone, who is in that particular business and who knows the ecosystem around. I mean, during these days of time, I mean, technology is so much so that, it doesn't feel that, people are sitting way across the ocean. I mean, the LinkedIn is there time and again. You open the LinkedIn, you see the feeds, pops, so many things, different ideas every day, that we see coming up. So why not? I mean, you can partner with anyone today over here in India. You see, even let's say for an example, there is a young guy, 25, 20 years. If you think he is good in something, why not, just partner, tie up with him, do something amazing, do something very crazy.
I think they should partner with us, being there on ground, and of course, this is the message that we want to give. That India is definitely a very attractive market. You should look at India, and also having the right partners in India matters, whether it's us or anyone whom you know. I'm sure we can talk about it in detail. You can always connect to us. We can give you more specific details depending on the kind of business you're in. So that brings us to the end of the webinar. Thank you so much for your time. Maggie, would you like to close this, or we can just log off?
Yeah, no, thank you so much, Krishna and Jack. I really appreciate this session. So informative, so many details and action items and things to look into. So really, really appreciate it. Nadia, do you want to just shout out our events at MCC?
Absolutely. I would like to drop on our chat room our events page. Please stay tuned. We have so many events upcoming, but we also have Business Builder Connect this Friday. You need to be a business builder and app. But I'll drop right now our events page. So please stay connected with the chamber even through our social medias or our newsletter that you can find also at the bottom of each page of our website. All right, so with that being said, thank you so much everyone for joining us today, and I will see you all soon.
Thanks, everyone. Have a good day. Bye.
Thank you.
Thank you.
Bye-bye.
Thank you. Bye.